For today's webinar, I think you all kind of have an idea of what we're here to chat about. I can't say I've really ever said before I've been, excited to talk about compliance and security, but when you mesh those concepts with really cool modern technology, that's to me when it gets really exciting. So, today we're here to really talk about how these compliance and regulatory related requirements can really be addressed through technology, some of the technology that's available, how it's out there, how it works, and then how we can still tick all the ticks in the box while trying to minimize the amount of friction in the experience. So that's kind of the premise of what we'll be chatting through today. So the specific topics or agenda, I guess, would be building trust in the onboarding process would be one. The second one, identity orchestration and fraud prevention. And the third, bullet here is the big one. We get asked questions about this a lot, which is really revolves very specifically around Fintrac compliance and data validation. And then the fourth one will be interesting. It's really getting into the data and the models that support the system from the fraud side. And so today, our speakers, we have AJ Hans. He's the CEO of Mobitize. Brings over 15 years of experience with specialties in startups and mature organizations, specifically around digital platforms, banking, telecommunications, billing, P2P, and B2B cross-border payments. Mobitize is on a mission to liberate banking by giving consumers the ability to bank how they want, when they want, for whichever products they need. They're collaborating and empowering financial institutions to transform how financial services are delivered and consumed. Their solutions focus on digital-first principles that enable partners and clients to deliver anytime, anywhere access for cross-border payments and origination services. And secondarily, we've got Sunil Madhu. He's a serial entrepreneur and a software architect with over 20 years of experience developing product teams and selling innovative software solutions. He has global experience and a broad range of expertise in hardware and software domains, particularly in information system security, identity and access management, and risk management. Today, Sunil is the founder and CEO of Instant, which is the first fully managed customer onboarding services for businesses with up to 100 million annual in fraud liability insurance. Instant helps businesses increase their top line revenue by signing up twice as many good customers at a fraction of the cost of their legacy and orchestration technologies without friction or fraud. So, appreciate Sunil and AJ, your time today in discussing this really important topic. I can't even count, the amount of times that I've had marketers and compliance people in the room, marketers wanting zero friction, single button click, give me a product. And then compliance people saying, wait, like we need to know if they're a PEP or if they're on the watch list. And, so kind of talking about how those two concepts mesh to, tick the boxes while also minimizing the friction. Really appreciate your expertise. And from there, I will leave it with you, AJ.
Perfect. Thanks, Sean. Appreciate the introduction. Just want to thank everyone for joining our webinar as well. So usually we're talking a lot about, and I've done a number of webinars with Sean and Instant as well, and we're talking a lot about origination, digital loan origination or account origination, demand accounts, all that type of stuff. And we do get a lot of questions about, I guess, the risks, the compliance, and how does all this happen in seconds? Is it really Fintrac compliant? What's happening behind the scenes? How can we learn more about that? So Doxum, I think, did a wonderful job of putting together this webinar. We wanted to bring in a security expert, somebody that I have a lot of respect for, Sunil Madhu from Instant. I've known Sunil for about 5 or 6 years through the kind of the speaking circuit in the Valley at a number of different payment and security compliance webinars. I got very intrigued about his work in social biometrics and behavioral analytics many years ago. And we brought some of that technology into Canada, worked with a number of financial institutions here, implementing social biometrics and some of the alternative methods of identity verification, which was really leading edge, and since then we've just built on that. And we'll kind of walk you through our journey and what we've learned, and hopefully these are things that'll give you a lot of value as you implement your solutions for origination and various lending solutions and so on and so forth. As you all know, that our lives, especially in the last year, have shifted online extensively, whether it's how we're getting our healthcare, whether we're shopping, buying groceries, ordering food, doing our banking. There's obviously been a massive focus on digital transformation. And with digital transformation and things that are moving, we also know that there's risk of fraud, and that fraud is really here to stay. These are just some of the latest stats. I won't go through each of them, but obviously in 2020, this is some global statistics in terms of the types of frauds, what's happening out there, whether it's human versus bot attacks, mobile versus desktop, what type of things are going on in the marketplace, and things that we all need to be careful about and understand, and how can we combat this type of fraud in our origination and onboarding solutions with a focus on customer due diligence, along with making sure that we provide a very smooth onboarding experience for clients and customers. And when you think about the onboarding experience in the digital account opening process, one of the number one things that all FIs are concerned about is how do you do proper digital identity document verification or identity validation, and keep it all KYC and AML compliant and Fintrac compliant. So that's a very key objective. And how do you orchestrate that in your origination solution that creates the right results? So you know which ones are good, you're keeping out the bad characters, and the questionable ones can be in a kind of a review status, so you can actually manually look through those applications. So that's some of the things that we'll really talk about in this webinar, and kind of show you behind the scenes what's happening within systems, what are we doing to make sure we can combat fraud and manage risk appropriately, and then also provide the clients who implement this type of a solution a zero risk guarantee in that process. It really starts, if you think about it, there's a foundation of trust. So when you're onboarding your clients, there has to be this trust that has to be generated. We know that consumers want to be able to use digital financial services. They want to be able to do a simple process where they can set up a checking account, a savings account, apply for a loan, get pre-approved for a mortgage, those types of things. But they've got to be able to trust the financial institution, their onboarding process. And we also know equally financial institutions have to be able to trust the consumer that's entering into their platform and domain. And this trust is even more critical as we're moving from kind of the physical world of branches into the digital world of financial solutions delivery. So if you look at it, we have to help the consumer to understand the importance of security and compliance, but at the same time, as an FI, we have to appreciate that friction needs to be minimized. And this kind of goes back to Sean's topic about the marketing folks and the risk and compliance folks, and creating that kind of happy medium between everybody. And when you think about establishing trust and goals that you as an FI have, identity verification and compliance, it really is just a means to an end. It will help you improve that customer journey, but really the goal is that you want to be able to increase revenues, attract your targeted demographics, increase operational efficiency, also have the ability, we talk a lot about in our origination solution about our product marketplace and how we can bundle products and increase your cross-selling, personalized products. So once you've established that trust, you kind of get to that next stage of being able to deliver the products and services that you want to be able to deliver to your clients, which obviously in the end helps you to prevent losing customers from any competition, any of the various different competitors out there in the marketplace. And it comes down to balancing risk and enhancing trust during the onboarding process. If you think about it, you're going through a process where you're taking a bit of information and maybe starts with a email address, a phone number, validating various parts of that information, and then pushing them through your fraud modeling, through document validation, facial biometrics or comparisons, the social data correlation that we're doing and also different utility account vendor data correlation. So it's a real, behind the scenes, a complex process from a user experience built into a very simple, non-intrusive process that increases confidence in accepting the good characters, weeding out kind of the bad, and also putting the questionable ones into more of a manual review process. And if you look at consumers and what they're trying to achieve, at the end of the day, they're very, very careful about how they share their personal information with any vendor that they're going to do business with, whether that's a financial institution or e-commerce or anything. And at the end of the day, the model that we've created, and we'll dive a little deeper into it and kind of go deeper under the surface, but really, as I mentioned, it starts with email and phone number. What we're doing with that phone is making sure that that individual owns that phone. So how do we do that? One is through a one-time password. We're verifying that they have the device. Once we know that they have the device, we can now go in and do an email match, a phone number match, an account name, address match with the carrier. So the carrier can validate, yes, this is a postpaid phone. He's had it for, let's say, over 180 days. They're in good standing on the account. And now that we have validated and done the device fingerprint and the device intelligence, we can work that same information through the model. So if that customer doesn't pass that initial check, there is no more checks and balances. We can just reject or put them into review and allow the FI to go through more of a manual review. But if they pass that model, what's happening is we can then go in and validate their user behavior. Was this a human based on keystrokes? Was it a human? Was it a bot? Put them through other correlation scores with various different documents and document sources, validate all of the geolocation and the various things that happen in the model. But the key thing to remember here is obviously each and every validation, there's a cost associated, whether you're running credit bureaus or whether you're doing data correlation checks and so on and so forth. And we want to be able to stop any extra cost right up front. So one of the things that we're doing is using the device intelligence, which costs very little, to understand that, make sure that if we move them down the model, we're moving down good people through the model versus spending money on bad people, knowing the end result, and we can stop any potential cost as well as fraud right up front. And that kind of, once we've got all that data, we even go one step further. So I think what's really important, and we'll dive into this a little bit deeper with Sunil and some of the things that we've been working with Instant on, is it's not just about data points and data matching and data correlation, but also understanding the quality of the data, matching that to multiple sources of data, and coming up with different models around third-party fraud, synthetic ID fraud, and really giving that confidence to a financial institution about the customer that is onboarding into their system. So with that, to dive a little deeper into that, I want to introduce Sunil. As I mentioned earlier, I've known Sunil for quite some time, 5-6 years, worked on various things together. Very, very impressed with his knowledge from a global perspective, as well as just the understanding around creating these AI-based machine learning models. And what we've done is looked at those models, embedded that seamlessly into the origination platform with Doxum for both the loan origination as well as demand account origination and demand products. So with Sunil, with that, I'll pass over to Sunil to talk a little bit deeper about what we're doing together and how some of these things work within their model. You may be on mute, Sunil.
Thanks for having me on, Jay. Thanks, Sean. Happy to be here. Yeah, just to go into what we're trying to do differently, as you said earlier, it's a fine line between balancing friction that the customer has to face with risk and compliance regulations that we have to enforce when a financial institution is onboarding a customer. Traditionally, most financial institutions have gone about solving for this problem of managing the risk and compliance requirements when customers are being onboarded by assembling together a variety of different data providers, point solution vendors, and point solution tools in order to create what's called risk and compliance waterfalls. So when you and I as consumers visit the financial institution's website or mobile application, and we fill out the sign up form as we apply for a new account, such as a deposit account or a loan, that information tends to flow through this orchestration layer that's often human assembled. And the objective is to get the consumer through that orchestration layer as quickly, as frictionlessly as possible. Unfortunately, a lot of the data providers don't have 100% accuracy or coverage over the population, especially with millennials and Generation Z, who are all credit thin file. And this results in a lot of friction for those specific consumers. And in fact, a lot of those good customers get rejected for the wrong reasons because of this traditional approach of creating a Lego block of risk and compliance technology. The other challenge is that because no vendor has 100% accuracy or coverage over the demographic, when you end up assembling together a bunch of solutions yourself or use an integration provider through which you assemble a bunch of vendors, you end up having the same problem, which is human orchestration lacks a lot of experience. If I were to tell a manager of risk at a particular financial institution that there are 20 businesses that you can use to validate someone's phone number, which one is the best one, very few risk officers would have the answer to that question. So it's kind of, assembling these different vendors into these orchestration waterfalls. It's kind of the blind leading the blind. And again, you suffer from the overall false positive rate of the system that you're building. So we've taken a completely different approach here, which is first off, look beyond just personal information verification. A lot of vendors out there simply compare data. So for example, under the Fintrac regulation in Canada, you can do KYC one of 3 different ways. You can ask for physical documentation from the consumer, where they have to provide a driver's license or a passport or some other state or government issued ID, and a selfie, which can then be verified. Alternatively, Fintrac recommends that you can use credit bureau sources like Equifax or TransUnion, which operate in Canada, and use those sources as trusted sources to verify information, such as someone's phone number or address. Or you can use the dual process method, which is to use separate, completely disparate data sources for unique pairwise checks. So for example, you use a utility vendor, such as a mobile network operator, to verify someone's name and phone number, and you use an address providing vendor to validate someone's name and address. So you can use the combination of these three different approaches, according to Fintrac, to comply with the law and to ensure that you're onboarding your customer without friction. With our approach, we do the minimum required, obviously, for the PII comparison per Fintrac requirements, but we go over and above those requirements by combining together a variety of different types of technology. We know that most fraudsters follow certain types of attack patterns, and every business has a certain type of attack surface. So we basically do a variety of checks that go above and beyond just personal information verification. So for example, as someone's going through your desired sign-up flow or sign-up journey, when you're asking someone for their date of birth, you can check to see if the person fills out that field through regular cognitive behavior of recall of someone's date of birth, which for most legitimate human beings happens in a sub-second time, where you can remember your date of birth and you fill out that value. But if we see that someone's copying and pasting that value into that field, or someone's tabbing out of the application and looking somewhere else for that data, that might indicate, for example, that you're dealing with a fraudster, not the legitimate applicant. So, weeding out human beings from bots, that's one thing. Making sure the device's posture is legitimate, that the device itself is not coming from a known spam network or a botnet. Understanding that the cognitive behavior of the human being going through that sign-up journey is legitimate and not something that a non-human would be doing. Comparing every sign-up against every other sign-up that have happened beforehand, and sort of putting these different signups into cohorts so that we know that the signup is not anomalous, making sure that the velocity of data that we're getting is legitimate. So if we start seeing a lot of different names and email addresses coming from the same IP address, that might tell you that it's a synthetic ID botnet. We've combined a variety of these types of cybersecurity related checks, along with PII verification and correlation. The combination of all of that data in real time flows into one or more collective intelligence models, which are essentially machine learning models that are trained collectively across different financial institutions. And so that benefits the industry as a whole, because it's defending each institution not only against the type of attack they might face individually, but also against type of attacks that affect the rest of the industry. All of that technology has been packaged into this platform, which is completely codeless. And in under a second, typically, the system is able to make a very accurate determination as to whether the individual is legitimate, or it's a synthetic ID, or some other type of attack vector that will pose fraud risk, in which case the identity is declined. And every accept or decline or review decision out of the system is fully justified by the machine in human explainable form, so that a compliance officer can ask the question, why was it that we allowed Sunil into the system? Or why did we reject Sunil for this particular transaction? That's fully explained by the system.
No, that's a good overview. And I think there was two things that, we looked at solutions all over, Sunil. So when we were doing our build with Doxum on origination, speaking to various vendors across North America, Europe, as well as globally in Asian markets, et cetera, two things that really were unique in this model that we've created. And one is the predictive modeling, which we're going to dive a little deeper into in another slide. But the second one is your guarantee that you provide, which is quite unique in the marketplace around fraud loss liability. So I'd love for you to maybe just share that a little bit about that with our audience here.
Hey, just one thing. Sorry, guys. Quick question. I think this is applicable. It came through. The question was, and it relates back to the bot detection piece. It was really a question about how browsers have autofill. How does this react when it comes to the kind of like bot detection algorithm?
So the system is trained in real time to recognize human beings going over a traditional kind of form fill out process through the customer journey versus machines, for example, auto-filling fields because the browser gives you auto-filling form filling help, or people copying and pasting, tabbing in and out of the screen, copying and pasting data, where the technology is sophisticated enough to understand the differences between each of those different events, which it takes into account in order to disintermediate between someone's browser doing an autofill versus a bot injecting credentials or data into the different form fields. So this is where we use artificial intelligence to actually study every click flow and the progression of every consumer through that sign-up process, and use that as a whole to disintermediate between human actors doing that versus machines doing that.
No, that's great. Thanks. Appreciate it, Sunil.
No problem at all.
So Sunil, I think I was just talking a little bit about the fraud loss liability guarantee. So I think I find that extremely intriguing and very, very unique in the industry. So maybe you can touch on that a little bit.
So there are very few companies. You'll find analog for what we're doing here for new account openings and day zero identity verification in the e-commerce industry, where people offer a type of indemnification against a type of fraud that affects all of e-commerce called chargebacks, which is someone using someone's credit card without their permission. So we're actually the only business in the market that is offering indemnification on day zero when we are seeing the customer for the very first time. And when we offer that indemnification, what we say is that if we tell you to allow that customer in, and you let that customer in as a result, and that customer, say a week from that date, commits some kind of fraud. Let's say they canceled an ACH transaction, a funding transaction into the account to establish the account, to steal the credit balance and sort of commit fraud. We will essentially take on the liability for that because we told you the customer was good as a result of which you accepted that customer. So we're the only vendor in the market that's able to do that. And that's primarily because of the way we've tooled our solution. Because we control every aspect of every check that we perform on the application, we don't really dictate the customer journey or the user experience. That's entirely up to each financial institution to govern. What we do is execute some technology as the customer goes through the various steps in the sign-up process. Because we tooled every single solution, we're able to therefore control the bounds of the false positives and the false negatives in the solution in order to warranty its performance. So we're the only vendor that's not only allowing businesses to shift loss liability as a result of certain types of fraud that occurs when new accounts are being established, up to the tune of $100 million annually. And we're the only vendor also in the market to give a guarantee to reduce most businesses' top line decline rate by at least 50%. On average, as most businesses focus on managing their own tooling to control for fraud, they have to play this balancing act between how many bad people their system is able to catch versus how many good people the system is going to reject for the wrong reasons, because they've assembled a bunch of tools together. We're the only vendor for the first time that removes that burden from our customers. So the customers can focus on delivering a better product or service to their end users, not have to worry about the changing fraud landscape and what to do to stay ahead of that. So by controlling the tooling and the technology, we're not only able to improve the overall accuracy, which means we're capturing more bad people and letting good people into your system, but we're also shielding you from the loss liability that you'd otherwise be exposed to.
Oh, that's great. And I think there's a question that came in, Sean. I just saw it online here from Pat, which says, when you take on the liability on that, what's the time limit? Is there some sort of time limit? So let's say the account is opened, let's say in April of 2021, fraud occurs in September. What is the time limit on that liability?
So typically it's within 90 days of the fraud event happening. Within 90 days, we find that most businesses typically get fraud tags. So most businesses are able to identify that something in the account went bad within 3 months of the account being established. So that's typically the limit that we draw up in the contract by default.
Great. So essentially, when you look at the zero fraud liability, one of the key things, and I'm talking from a Mobitize perspective here, and then working with Doxum, this was actually one of the key differentiators along with the fraud modeling. So your fraud modeling that you've created, which will, as I mentioned earlier, we'll go in a bit deeper, really allows you to provide this type of loss liability to clients that implement the solution.
That's correct. We're actually doing two things. We're doing an actuarial model on one side for every customer that signed up, looking at their history of fraud losses and so on. And we study that across the industry because it tends to be kind of consistent. And that allows us to pick our customers wisely. And then we've got these complex fraud models, which we're constantly retraining and we're adding and it's the two of those things combined with our AI that allows us to take on the coverage for the loss liability. And what that means is, from a treasury perspective, if your financial institution is exposed to $1 million of annual fraud loss liability in new account openings, you might actually keep $2 million of reserves against that loss liability, or you might keep $1 million of capital as reserves. We allow your financial institution to free up those reserves, so Treasury can turn that into working capital instead of leaving it lying around for a rainy day, and we allow you to shift that liability off your books to us.
Great. So I guess another topic that we get into many conversations on, Sunil, when we're talking about origination is around security compliance, Fintrac compliance. So maybe you can touch a little bit on how we're handling that together.
Yeah, so in every market we operate, we obviously ensure that we're not just focusing on fraud, but we care about the anti-money laundering regulation in that market. So in Canada, Fintrac is the organization in government that's responsible for financial reporting across transactions and for financial crimes reporting for money laundering and terrorism activities. So Fintrac provides certain guidance to the community, to financial institutions, merchants and other types of organizations that deal with money movement as to what types of checks that they have to put in place in order to properly vet a new customer that's signing up, so that that institution knows their customer. And so we meet the demands of the law, and we actually go above and beyond the requirements of the law in terms of the types of checks that we do to ensure that each customer is legitimate and fraud-free and compliant. Part of that involves obviously validating the information in privacy and consent-aware ways as dictated by regulation, so that we're dealing with vendors that are well-known, utilized by financial institutions, and respected throughout the industry, that all of the data that's being utilized is collected with the consent of the consumers, it's not screen scraped and so on. We're also simultaneously not only checking for the verification of each element of data, but we try to cross correlate every bit of data so that we know that the phone number and the address and the date of birth and national identifier and whatever piece of information your business needs to collect from the customer has been cross-referenced back to the name. So we know that it is in fact belonging to a person that's legitimate. We're able to verify possession of devices out of band. So we know, for example, that the person who is the actual subscriber owner of that phone number is in possession of the device as they're performing the sign up. So we know that it's not someone who's stolen someone's identity. And we run a lot of different types of models to make sure the data itself belongs to a real world person and not some synthetic made up identity, or is an identity that belongs to someone else that's been altered, for example. And we simultaneously check all the global watch lists. Every country publishes sanctions list for anti-money laundering. We cover the gamut of all of the sanctions lists, not only in Canada, but across the globe, including politically exposed people, as well as adverse screening against different types of adverse media. We do all of that simultaneous to vetting the identity, the device, the psychographic behavior, etc., in order to not only meet the regulatory burden, but to go beyond that to know your customer really well.
Great. So the next one is, once again, one of the key things that was very interesting to us in origination is around the fraud modeling. And, we've all been in that situation. I think in the early days, I remember when we first started to implement this, you buy different solutions, you integrate those solutions, you create this waterfall method, and then you have to guess as to how you're going to create your own internal fraud model from that perspective.
Right.
And it's kind of like, I've had conversations with clients where, people are offering different solutions. It's like buying a car, you get a tire, a steering wheel, a seat, and then you kind of assemble that and you're assembling your own car for your transportation. But in this case, all of that comes into one elegant solution with different types of modeling that's based on artificial intelligence. And I know two of the key models between the third-party fraud model, the synthetic fraud model, and coming up with the overall aggregate score on fraud. It'd be great if you touch on that and help to educate the audience here a little bit on how that all works.
Yeah, in the traditional world, you'd assemble together a bunch of tools, a bunch of data providers, and you'd have to write business rules on top of them. So you might write a business rule that says if an applicant's email address is legitimate and their phone number is not a commercial phone number, and the phone number belongs to that subscriber and belongs to a large network and is not a burner phone, and the address checks out, then to allow the customer in. Otherwise, you might subject them to, say, document verification or some other step-up mechanism. Traditionally, businesses write hundreds of these types of rules. So it's not really machine learning in the sense that it's human intelligence that's going into writing the rules. The challenge with that is human intelligence tends to be very narrow and scoped to the types of experiences that that particular business may have faced in terms of its fraud exposure. These business rules also tend to have to be maintained by human beings frequently. So every time fraud gets through the system, you have to go and change the rules. After a while, as you end up with hundreds of thousands of rules, it becomes very difficult to manage the rules base. So if you delete rule number 557, what's the cascading effect of that through the entire rules base? It's hard to tell. So, there are lots of challenges to human beings writing these orchestration rules and assembling a bunch of vendors and then hoping that the entire system is tuned that the fraud losses will remain below the limit that gives the CFO the heartburn. That really is an inefficient mechanism of managing this problem. In our opinion, this problem is better solved by machines that learn collectively. So while it's being fed information from your business, it's also being fed information from every other financial institution that's on the platform simultaneously, which allows the machine to learn at a much more rapid pace, that when it sees an event that's previously unseen, it's able to classify that event, that identity as good or bad, much more accurately than a human being is able to do. So, we've used that technology behind the scenes, and then we've created discrete models through a variety of different types of tests that we are performing on the consumer as they go through the desired customer journey. And these evolve over time. So we're able to add newer types of technology without you as a customer having to worry about constantly keeping the system up to date or which vendors to utilize. These are problems you no longer have to worry about. And we're basically providing a warranty for the product as well, which means that if we ever get the answer wrong, we're liable for it, not you.
So essentially, when we made our decision and the things that we researched and understood, it was really the predictive modeling that allows Instant to provide that type of indemnity on the fraud liability.
That's exactly right. And the notion that modeling improves rapidly with every customer we sign up, the system gets smarter overall. And that's something I've kind of proven out in solutions I've built in the past, in companies I've created in the past.
So I know we also had a question which kind of ties into this next slide. There was a question around, can this technology allow individuals to open accounts without being present in person? Are you able to verify their identification if they provide you a picture of their identification document? What types of ID documents are you able to verify? So essentially, the way the system is designed is that definitely we can do ID verification. We support all IDs within North America. For this solution with Doxum, predominantly it's all Canadian IDs, whether it's a driver's license, a passport, a BC services card, or a health card, BC ID, those types of things. And within the system, obviously, when we talk about ID verification, the physical document validating the information on the front of the license, the back of the license, taking the OCR, comparing the information in the OCR to the identity of the individual, then combining that with the facial biometric comparison, and then beyond plus. So really the social biometric, behavioral analytics, telecom account verification that we talked about, and those different types of things. And at the end of that, essentially, what we've proven is about a 99% accuracy in detecting fraudulent documents or identities with a very low false rejection rate. So and when you tie all that together around Fintrac compliance, whether that's through government photo ID, multiple account information verification, as well as the OFAC and AML checks. And we'll talk a little bit more about the different data sources. I think part of the question also was for KYB or business information. So we are actually bringing that capability into the solution as well. So being able to do the same type of validations, checks and balances for business clients to understand who the owner of the business, directors, officers, and validating the identities of those individuals as well.
Yeah, that's right. I mean, to answer the question about can this be done remotely, yes. The system has been done to support digital onboarding, so the customer does not need to be in front of you. They can be remote. And as Ajay pointed out, the system supports all of the various state and government issued IDs that are used in Canada per the Fintrac requirements. So Fintrac method 1 is fully supported by the system, basically.
Good. So we talked about data sources. So this is some of the various different data sources when we get into kind of the social behavioral analytics. So there's over 2 billion exclusive records that get compiled from various different sources, whether that's public records, business listings, marketing lists, phone directories, crowdsourced data. In fact, just from personal experience, from a Mobitize perspective, we have a standalone solution where we're getting a lot of requests in the healthcare industry. So kind of cross-industry stuff. We're able to even integrate criminal checks, be able to integrate motor vehicle checks. So you can see that this type of solution, which is great for regulated financial services, also can be used across different industry verticals. And Sunil, I'm not sure if you got more to add just around.
Yeah, I mean, Fintrac is very particular about the types of data sources and the reputation of the data sources. So we follow Fintrac requirements to the T. All of the data sources we utilize are open and published by us. You can also get a verification that we certify each data source that we plug into the system to fourth party. So we ensure that any data sources that are added to the system complies with privacy and compliance regulations, has not been screen scraped, has the consent of the consumers for the purpose under which the data is going to be utilized. All of that's done from a compliance perspective. We audit all our data providers. And then, the social side, Fintrac basically states that, social data cannot be used in itself for KYC purposes. So we do not use social data for the KYC purpose. We use social data more for correlation analysis as an extra dimension that we can check to make sure that there is a digital footprint for the individual. Because most millennials today, while they may be credit thin file and they may not have a lot of records in the traditional credit bureau data sources, everybody lives digital lives and they have digital exhaust, digital breadcrumbs, if you will. So we augment all of the traditional data sources with these other online sources as well through some of the vendors that we utilize in order to make sure that the identity has presence both digitally online as well as in the real world. And that improves the accuracy and coverage of the system.
And around the AML terrorist financing watch lists, I know that you work with Comply Advantage, so I'll let you talk a little bit about how we're doing that.
Yeah, so one of our partners is Comply Advantage. They are basically a global provider of data for anti-money laundering. They're used by some of the largest financial institutions in the world. What we do is we get the benefit of being able to search across all the global sanctions lists that are officially published by the governments around the world. They also run nightly jobs to go over adverse media, and they have essentially millions of objects across the internet that they scan and they assimilate. So we search through all of that. So in under a second, when we process the individual, we also ensure that the individual is not on any known sanctions list, and they're not a politically exposed person, and that there isn't any adverse media about them. When we do find a match let's say that there's a match on someone's name, the list that was matched, as well as the, whether it was adverse media or whatnot, all of the links there are also retrieved so that the human compliance officer that's going to go and do some more research around that match can easily see where the match was and can determine whether the individual signing up is actually the individual who's been sanctioned or someone who just shares the same name.
Yeah, I know in our testing and various things that we've done through proof of concepts and those types of things, we've had situations where you have an individual, there is a match, and then there's different ways on how you can confirm whether that is the same individual. Obviously, just name is not the only way. There's other things. I know in our example, date of birth was, so doing name and date of birth took that person from a review status into an accepted status.
Yes, so the system is very comprehensive in terms of its coverage of sanctioned individuals globally.
Hey guys, just a quick one too. We're actually at time. I think we'll probably run through just to cover the last few things. But if anybody has to run, really appreciate your time. Coming onto the webinar, and we will send out the recording. So if you do have to jump, feel free to get to your next web or WebEx or Zoom or your next office meeting. And again, appreciate coming. But otherwise, Sunil and AJ, I think we'll probably just keep going and again send out the last piece to anybody else that had to drop. Thanks, guys.
Thanks, Sean. Yeah, I mean, here we just wanted to present like a typical ROI comparing building something yourself versus using a managed service like ours. If you're an institution that's, say, rejecting 200 people being signed up each month for the wrong reasons, and each individual you're rejecting costs you about $300 lifetime value a year, you're essentially losing 300 times 12 times 200 dollars. You're essentially losing about $60,000 in revenue opportunity in the top line as a result. You might be spending $1 million in actual fraud losses a year. That's the amount you carry on your balance sheet. Putting together all of the resources to build and manage risk and compliance for new account openings, you might be spending about $500,000 annually with the manual review team and the technology that you have to manage. So overall, it might be costing a small institution something in the range of $2.5 million a year. And this is just typical of medium-sized financial institutions that we've studied and kind of their CapEx, OpEx outlay and their typical losses. Whereas, when you use a managed service, you get the benefit that you're not going to reject as many good people because the system is more accurate in the way it's constructed. So instead of 200 people being rejected each month, you might be rejecting 100 people. So you're essentially creating $30,000 of additional revenue opportunity where you're losing $60,000 of opportunity every month. And then you're on an annualized basis. And instead of spending $500,000, you're going to save yourself some money. Typically, managed services are about 30% cheaper than doing it yourself. And then you get the benefit that you don't have to have the $1 million fraud loss allocation or the $1 million in capital reserves against your fraud losses. That becomes working capital. And so in essence, the managed service would have saved your business about $2.1 million, whereas you'd normally be spending over 2.5 and still owning the losses, losing the top line revenue growth, and having capital trapped in capital reserves against your potential losses. So there's a lot to be said from a business perspective in terms of switching to a managed service model. First off, it gets your product to market much quicker. You can literally drop load a solution like Mobitize and DocSims in a matter of hours and get up and running. And then you end up getting all of these other benefits, such as faster top line growth as you go digital, the ability for you to sign up customers much faster without exposing yourself to the CapEx and OpEx costs or the loss liability that you would otherwise be doing.
So I think we're pretty much at the last slide here, and really just kind of to sum up top of mind security, risk, and compliance. When you look at kind of three areas, one is the trust and trusted signups, being able to ensure that bots, bad actors can be stopped during that sign up process for onboarding, the Fintrac compliance and fraud reduction. So really making sure that you're fully KYC AML compliant. Everything is auditable in terms of regulators. There's a whole availability of all the data, how things were handled, and so on and so forth. As well as the key one for financial institutions is this frictionless customer experience. So some of you may have seen our demos around the origination solution for lending, as well as for onboarding demand products, the dynamic product workflows. It's a flawless customer experience, allowing to add multiple products into a shopping cart style journey, with all of that complete compliance orchestration happening kind of behind the scenes. So I think there was one question, Sean. I'm not sure if you've seen it. Sean, do you see the question there? Do you want me to just go ahead?
Yeah, you might as well take it, EJ.
So it says, I haven't looked at it yet, but it says, speaking on trust of the consumer, what about those that value privacy and are concerned about how their information is being sourced or used? Would they be able to know which source was being used to confirm their identity? So Sunil, I'll let you take that one, and I can always add to it.
Typically, all consumers have the ability to contact the institution and ask how the data is being used and what data sources have been used to verify their identity. Again, these are not secrets. The information is typically provided to most customers online in terms of service or EULA for the particular application. If they don't obviously read that, they're able to contact your customer support group or ours, and that information is easily provided.
And I think one of the things that we do in our Doxum solution, Sean, is we have obviously a terms and conditions, and there's the ability for an FI, just like we do for the credit score, that there may be a credit check needed. Easy enough to put some information in there if an FI chooses to be able to share that with their potential members or customers around how the KYC process is being handled.
Yeah, I think there's a couple different ways you would accomplish that. It could also be inclusive within the T's and C's, right? Yep. Like an acknowledgement of use of data, checking third-party data sources. We typically see something in there that would communicate, the use of information that obviously the consumer would have to acknowledge to, as they run through the process.
Correct. Yeah. So I think that is the end of the webinar. I'm not sure if there's any more questions or happy to stick around. Sunil, are you able to stick around for a couple of minutes if there are questions? Sean?
Sorry, my audio had cut out there. What was that, AJ?
No, I was just saying that's all we had for the webinar. Sunil and I are happy to stick around if there are any more questions that anybody has.
Yeah, no, I think that's great. We can stick on the line here for a minute or two, and if no questions come up, thanks everybody for the time. And as I mentioned earlier, on a couple occasions, you'll all get a recording, so you can share it around and re-review it if there's some details that you guys wanted to kind of refresh your memories on. But yeah, if you have any questions, just put them into the Q&A section of the app, and we would be happy to chat about them. And otherwise, thanks for your time, everybody else. And if you don't have any questions or don't, want to stick around, have a nice day, and really thanks for coming.
I think there's a question in the chat box, by the way, from Barbara, not in the QA box, but
okay.
It was about how does the system scan for negative news on the potential member? The answer is yes. Adverse media scans happen automatically in the KYC checks at the time of sign up. Also, the system has the capability to auto rescan everybody on a monthly basis, so that you know that your existing customer base of good people remains good throughout.
I think there's another question that just came in. Has any financial institution been through a Fintrac audit using this program? Sunil?
We have just entered the Canadian market, but we've actually powered US financial institutions that have already been audited. And the technology that's being used here is used to power some of the largest financial institutions here in the United States. I believe, Ajay, you have credit unions that are currently
Yes.
going onto the platform as well, right?
That is correct. So we have one that is actually using it or just about to start using it, about to go live. And there are a number of financial institutions that are signed up with the origination platform that are going to be going live with the solution as well. One thing that we did do is through our due diligence, went through all of the Fintrac regulatory compliance requirements to ensure that it would meet all of those standards.
Yeah, and every institution that's obviously signing up to the solution has their own programs, and they end up auditing us to make sure that the solution fits within their requirements, obviously.
I guess what I can also share is a number of years ago, we did implement parts of a solution of this solution with Sunil. This one is much more advanced, and that one had gone through a Fintrac compliance and risk compliance audit as well. Oh, I think there's another one here that's popped up. Would our members' information be stored in Canada? So I think we did touch on that. So all of that information is actually stored in Canada.
And Rebecca asked another one about the authenticity of the document.
Authenticity.
That's right. So all physical documents are validated so that we know that the identity of the document is valid. Same thing with non-documentary data. So people's names, phone numbers, addresses, any information that's actually collected from the end consumer is authenticated according to Fintrac's requirements.
We can actually, I'm not, there's a few people here, but we can actually even show some of the results that come up. So if you look at within the system itself, if you look at a validation of all of the different justification codes, but if you, this is all the data correlation, matching of data and information about the individual. And here's all the document validation where you can see here it says match selfie verified. This is the face with the actual documents and those types of things. So all of this is available in terms of data to the financial institution that'd be utilizing the service.
That's right. Is it provided digitally in transaction review?
In fact, the way we've done it with the Doxum implementation is this all gets available. Sean, you may want to touch on that a bit, but it goes right into your self-serve platform, the in-branch CRM.
Yeah, the system obviously handles doing all of this in the background as the consumer is running through the process, you know, with all the checks and balances and gating and referral processes accordingly. And then the raw data does end up inside the administrative platform, right? So staff or an auditor or somebody from compliance can actually come in and, you know, take a look at the raw data that's come through from the system. So that, you know, the scores and the results directly in the administrative portion of the platform. And we're right at 3. So I think we'll probably, you know, cut it off here. If anybody has any other questions, you know, feel free to message myself or AJ or, you know, Sunil. You know, we're more than happy to chat about, you know, either the compliance side of things or Fintrac, or even the solution itself. So, you know, thanks everybody for your time, and thanks AJ and Sunil for your time as well. And I guess from here we'll sign off. And again, thank you everybody. Have a nice day.
Thanks everybody.